I felt that what we saw last night was probably more justified than the rebound we're seeing this morning, because, of course, we don't know what a Trump presidency really will mean. But if you go on the basis of what he has said in his campaign and also what he has said consistently over many years of sort of peripheral involvement in politics, the two key things that Donald Trump believes in are both, I think, very negative for risk assets and for equities globally, but particularly for emerging markets, as we've already heard in terms of the market movement. And they are that, first of all, the global trade isn't just a zero-sum game, but it's a negative-sum game. And therefore, it's something that the growth of global free trade is something that has to be reversed. That's very negative for markets. And the second thing that I think he clearly believes in is that a big surge in deficits and government deficits in the US would do the world and the economy no harm and probably quite a bit of good. Now, that may actually be positive for some assets in the US, but I think it ultimately will lead, or fairly shortly, to higher US interest rates, which, again, are very damaging to risk assets all over the world.
And so, Anatol, we just ran through the various US asset classes from dollar, bonds, equities. Which of those do you think has rebounded too much? Which is the best one that you think you would use to play this more depressing view of the election result that you have?
I would look at particularly emerging market and international equities. I think they have a lot of downside from where we are today, which, after all, is near record highs, essentially full-scale record highs in the S&P 500, but near record highs in global MSCI and so on. So there's quite a lot of downside, I think, to international equities, and I think there's a lot of downside to bond prices all over the world, because it seems to me that a Trump attempt, if you like, to emulate Reaganomics of the early 80s is bound to lead to higher interest rates and steeper yield curves, and probably also a higher dollar rather than a lower dollar.